Hello traders and welcome to another video review. Today is Thursday, April 20th, 2023. Let's take a look what's going on the Forex market today. Overnight we got the data from the New Zealand in form of the CPI, and as you can see the CPI is still lower than expected. 1.2% was the CPI actual reading. Forecast was 1.7. Previous reading was 1.4, which means that for the first quarter of the 2023 the CPI in New Zealand is decreasing. PboC of China loan prime rate data had been published overnight as well, and the loan prime rate is set at the same level of 3.65%, just as forecasted. During the London session, we got data from the ECB in form of the account of the monetary policy meeting minutes. So please notice that 1:30 there is a release of this kind of data from the last ECB meeting. And then during the New York session, we got the Philadelphia Fed Manufacturing Index and initial jobless claims scheduled for release at 2:30, and existing home sites scheduled for release at 4 p.m. So both of this data are from the US, of course. So all of this important data had been listed here in our Forex calendar. I think we should see what is going on the New Zealand dollar first. The 4-hour chart of the New Zealand dollar is showing us the weakening strength of the New Zealand dollar, which broke below the local technical support and low from the 17th of April at 6,156. The local low was made at 6,144, so this is not like a big breakout. Nevertheless, we got a new local low. The intraday technical resistance is located at 6,219 pips, and it looks like this market is reversing lower. If we take a look on our short-term trend line made from the high of 5th of April, so we can clearly see that this line is that the market trades below this line, and it trades below the 50 periods moving average. If we add 100 periods moving average, we can have the cross of both of these moving averages, which means that basically the market is poisoned to go lower in the near term. The next target for bears is located at 6,132. So this is the technical support, and one more technical support, which is the key technical support for the bulls, is located at 6,079 pips. The momentum is low at the level of 39 points. The momentum is negative. So the market is clearly under the control of the bears. So we should prepare for another leg to the downside, hitting and testing the one of the nearest technical support levels. So that's everything about the New Zealand dollar. Now let's take a look at the euro. The euro dollar classical market analysis is telling us that just recently we've been trying to rebound from this very sharp decline towards the level of 1.0910. It was so far so good, but we didn't rise more than towards the level of 1.0985, and one good clue for the bulls is that the pin bar made on the 4-hour chart looks rather bullish, because it bounced from the 100 periods moving average, which is okay. So still this moving average provides the support for eventually for the bulls, okay. But if there is no breakout above 1.0985 level soon, we might find ourselves to move lower. We might find the euro dollar to test the another technical support and the low of the 10th of April, located at 1.0932. Overall, the picture is rather bullish, because we are still trading above the moving averages, and we keep doing the higher highs and higher lows on the 4-hour chart of the euro dollar. Nevertheless, the volatility is quite low these days, and by the end of the day we might see some sort of the volatility increase. Nevertheless, how big that will be, that's just a matter of the momentum. Momentum is now 49.63, which is basically 50 points on the RSI, which of course means that this is the neutral momentum, so neither bulls nor bears are in the short term in charge of the euro dollar market. So right now what we can do is to wait for another breakout either to the upside or to the downside, because and then the spike in the momentum in the right direction. So screenshot is done. We can go to another market. We know that we have some data from the US in form of the Philadelphia Fed Manufacturing Index and existing home sales. So the market we should take a look at might be related to to this data release, and I think that the S&P 500 as a global index might be just appropriate. So what do we have here on the S&P 500 4-hour chart? If we take a look here, there is a high from the February 2nd, 2023. So that's the technical resistance, the key technical resistance that has not been tested this year. During the recent few sessions, we got this up movement here to the upside. Nevertheless, it doesn't look impulsive. So we might find ourselves soon in some sort of the test of maybe of this high. We might do like a double high, and then if there is no breakout, the market might basically reverse. Let me just point out the recent local high, 4,177 points. Let me just zoom in a little bit more to the newest data. So that's the local high, quite close to this red line swing high, and of course we got the local technical support at intraday technical support as well, 4,130. Nevertheless, what is much more important is that we should take a look at this kind of a thing that the market is trying to make, I guess, judging by the dynamics inside of this movement. It looks like the market is trying to do some sort of the wedge, because this movement inside of the wedge looks very much corrective. This is like 1, 2, 3, 4, 5, and the wedge might be violated to the downside. We are still above the 50 and 100 periods moving average. Momentum is still positive. However, this kind of a movement doesn't tell us much about the future plans of the bulls and bears, but it's clearly corrective. And if you take a look here, you could easily see that there is a gap here, okay, between those two levels. So let me just point it out for you. There is a gap that needs to be covered. Of course, when the market will cover the gap, that's another thing, but still the space between 3,975 and 4,000 points is the up gap for the bulls. It's below 50 and 100 periods moving average. So this kind of scenario for the S&P 500 maybe in the near time, it's hard to say when exactly, is nothing impossible these days. So if this is the rising wedge, then of course we might see the breakout to the downside and maybe even the gap cover very, very soon on the S&P 500 market. Otherwise, if we just zoom out again, you can clearly see that this market range has been maintained for quite some time, from the beginning of the year and even in the December last year. So we are still trading kind of a horizontally, you see, inside of this range. The last year lows from the October, 3,400, basically 3,500 points, and then of course this kind of a horizontal movement that cannot apparently break above 4,200 points. So these moving averages are right now showing us that neither bulls nor bears have the advantage over the market participants, the other market participants. So I think we should see we should wait for the decisive breakout in the S&P 500. Otherwise, the market might be continuing this move for quite some time in the future. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.